Welcome to this edition of Trading Bits and Bytes. I'm Susan Littlefield. Lots of things to look at. As we know, weather has been, I think, the hot water cooler talk on social media, and I'm sure where water coolers meet as well with producers, and how this is really kind of turning into more of a weather-related market. So what is that going to mean when we get to harvest? We're going to bring in the expert to hopefully give us an insight as to what's going on. Jeff Peterson is joining us with Heartland Farm Partners. And let's first talk about the weather, because this has turned into very much a weather-related market.
It really has. One of the things we'd said earlier, Susan, is it was going to take weather to get this market to move. Because if you think back, probably the last time we talked, it was a matter of, well, why didn't this market bounce? Well, we're getting a bounce, and it's back to the weather side, and that's what it's taking to do it.
So because we've got a weather-related market, guys are probably already thinking, if I don't get rain the rest of July, or if I don't get the rains I need in August, what is that going to mean for prices when I get the combine in the field?
Yeah, that's a great point. So a couple things we want to step back and look at is that, we had the benefit of seeing the quarterly stocks report. It came out of the June. We know those will get factored into the WASDE report this month. But if we sit back and look at kind of the big picture, what we know is we still have plenty of old crop corn. We have a lot of new crop corn, and that's going to kind of put a damper on how high this market can go. And unfortunately, I think unless this market actually and the weather stays around, maybe all the way through July into August, which I don't think it necessarily will, these dry conditions, we'll have to see. But, it would really take that to see this market take a substantial move higher. But as a weather market, each weather forecast we get gives us a little bit more strength in this market. So as we come back to that, some of the things we're going to have to do is we're going to have to probably temper our expectation and, and say what is going to trigger our next level of sales. And we need to get ready to sell in here. If you haven't made much for sales, you need to start kind of getting ready.
So to that guy that has still old crop in the bin and is looking at his new crop and hasn't done any marketing, what do we do?
Yeah, I think we get ready and we start making some sales into this market. I mean, if we're at a point where we've sold, let's start on the old crop first. And if we've sold some of our bushels, I think letting go of some bushels in here if we're moving higher. And actually, that'd be one way of doing it, and then look to let go of a few more as we move a little bit higher in here, because this thing will turn quickly on us. So we have to go about that route. If you wanted to be safe, what you could do is you could physically go ahead and make your sales and then come back in and reown with calls. And what you've done in that example, Susan, you're still going to be able to get a higher price. The market's going to go higher. But if it would really fall out of bed, that ultimately you'd only be out so much money.
Now seems the time, too, that we got to not look just outside our back door. We need to look at the entire corn belt as to how this production's going.
We really do, and we've taken a look in the past. One way we kind of keep a look at that, we look at the crop condition reports, and those numbers are still looking good on the corn side. I mean, we're not pulling this condition down dramatically. We're also looking at the short to very short percentages on our weekly crop progress numbers in regard to the topsoil moisture, and that's sitting at about 31%, and that's basically, it's higher than what we normally see. But to give you an idea, as a comparison back to 2012 is 75%. So we're nowhere near what that is, but what it's telling us is the soil is drying out. But we haven't got to a point yet where people are talking about reducing the yield yet. And that would be really what it would take to probably get us another stage higher, is people starting to talk about a yield reduction.
And that's an important factor to remind yourself. We haven't gotten to that point yet.
Right, exactly. We haven't got there yet. It could happen, though. So that's something we want to keep in mind.
Does it surprise you that there's been a lot of talk about 1988 and 2012 and the dryness and how pretty close similar they are to now? Do we pull from some marketing ideas from those years?
Yeah, so that's a good question. So back in 88 and 2012, those are some very dry and warm years. No, it doesn't surprise me because that we're comparing to those years. I don't think they line up quite yet. We're not that dry by no means yet. But I think individuals look at those years by comparison just to see where they were at. But I do think the lesson we can learn from them is that when this market turns around, it still can go much lower yet. So that's something we don't want to forget about, Susan.
All right, lots of things to look at. Thanks, Jeff.
You're welcome.
Jeff Peterson has been joining us this week with Heartland Farm Partners, and that's this week's edition of Trading Bits and Bytes. I'm Susan Littlefield.